Hello, I hope everybody is doing well. Well, we certainly are living during interesting times, aren't we? I think I've said that before, probably more than once. I wish I could stop saying it, to be honest. Oh, and at the end, I explained about structured note investments. So please hang around for that or fast forward if you don't want to hear me, because it's something you should definitely hear about. But this won't be long. Okay, I regress. The most important development since the last video about a month ago is Trump issued a 90-day pause on tariffs. At the time of the last video, the tariff had just started. This new pause was initiated on countries that are willing to reciprocate, but not China, our biggest trading partner. Yet the newest development is that now the U.S. is in talks with China. Well, again, China is our biggest trading partner by far, at almost $500 billion a year. The market rallied off the bottom on this news. And the market seems drunk on hope these days and is all over the place. Since the beginning of 25, the market went up 5%, down 20%, and is now back up to only down 5% in a matter of less than 5 months. None of this makes any sense. And again, when there's a puppet master pulling the strings on the value of the market, we really don't know if we've bottomed or if we have lower to go. We really don't know what's going to happen with earnings or what things are valued at. So what did I do? We added structured notes. With structured notes, you can make money in all market conditions. There are income notes, which I'll explain, and directional growth notes with some principal protection, and let me explain. Income or yield notes pay income. Directional notes make money when the market goes up or down in many cases. I'll explain. Income or yield notes pay income. Directional notes make money when the market goes up or down. Again, I said it twice because I want you to hear me twice. I think you'll get it better. So let's look at these two examples. Let's start off with the income note. Very simply put, you get paid a stated percentage monthly as long as a few things happen. Take a look at this graph. As you can see here, you get paid almost 1% a month, which is just under 12% a year, as long as two things happen. In this case, your underlying investment is based on 3 stock market indexes, as you can see there. As I said, you get paid every month, here, and here, as long as the underlying investment is above a 30% loss. It doesn't lose more than 30. If the investment drops below a 30% loss, as you can see here, you do not get paid on the coupon or you do not get paid the interest that month. Some of these investments have what's called memory. And this means that once the investment gets back above a 30% loss, you are paid for the months you missed. Check out the next slide. Each structure is different, but the investment will be called away after you've been paid, after it's been up for a period of months. If the underlying investment is positive for a period of time, that means you get 100% of your money back and you keep the interest you were paid over the months that they were paying you. Now check out this last slide. Here's how you lose money in this note. And the probability this happens is very low from a percentage basis. If the underlying index or investment is at a 30% loss, in this case, after 15 months, you will lose money, just like a stock. The fact is, indexes and stocks are not down 30% 2 to 3 years later, 90+% of the time. It's almost unheard of. It can and has happened, but the major indexes and major stocks, it's extremely unlikely with the major indexes and stocks. As far as overall safety is concerned, these structured notes are backed and created by the biggest banks in the world. B of A, Goldman Sachs. I mean, you know all the names of these banks. Now let's quickly look at directional notes, which are also growth notes. This note cannot be called away like the income notes we just spoke about. You hold it for the term. Now, you can sell early at the market price if you wish. They're not a liquid, but it just depends on where the market is for the underlying investment to be, depending on where the underlying investment is. So yes, there always is a bid to sell. It just depends upon whether the note is moving in the right direction. So this note will look at the returns of 3 indexes, like the previous one, although many of them are different, over a 3-year period, and give you the return of the worst performing note plus 15% on top of the return, as you see here. Now look at graph 2. Here's where the directional component comes in. If the worst index of the 3 in this example is down 20% with a 30% barrier, you make up to 20% return. You make a 20% return. That's right. If the index is down 20% or 29%, you make 20 or 29. That's the nature of a directional node. Now, the next graph illustrates the worst case scenario, which again doesn't happen hardly ever, like I mentioned. And this is realized when the worst index is down by over 30% in this example after 3 full years, which means you take the full loss of 30%, 32%. Again, this losing scenario has happened and it can happen again, but it's extremely unlikely. I'd love to hear your feedback if you have any. You can reply to this email, or you can schedule a time to chat about this or any subject below on the email where it says book a call here. Okay, that's it for today. Thank you for listening. Into work here. Don't have any meetings, so I'm very relaxed dress, but I wanted to give an update because I was going to send the monthly client video. Of course, I did it on Friday, and over the weekend there's been, a development that, China and the U.S. are going to agree to, a tariff deal, which, it remains to be seen. All this stuff is early, and it's so hard to know how to decipher these headlines and how much of these headlines are accurate. But at any rate, we're on top of it. So I just didn't want you to get the video and think, wow, what happened today? He didn't address that. So that's what's happening. We'll have to see what happens moving forward. And, again, we still have the overreaching issues from last year, which are not perfect. The economy is already having somewhat of a problem. So, maybe the tariffs are magic and everything is going to be better. So have a great week. Thanks for listening the second time.